Florida pulls $2 billion worth of investments from BlackRock over ECG investments. Another amazing thing that happened, well, for me at least, Tesla Semi being used in a parade for Christmas, and here's a picture of it. I like the color, the orange, the yellow. And according to this article, U.S. job growth remains strong, defying Fed's rate strategies. Employers added 263,000 workers in November. Even as some industries are slowing down, wage growth is exceeded expectations, but I don't know if this is accurate or not. Wages continue to increase. Where is this happening? I don't think people are getting wage increases, especially if companies are cutting back on budgeting. So those numbers might be accurate, and that article might not be accurate, because when you look at the layoffs that are happening, we still haven't accounted for all the layoffs that have been happening recently. We have big tech companies laying people off. We have Amazon laying people off. Here's an article, layoffs. What layoffs? Everyone's laying people off. So it looks like Apple is looking to move production out of China. And as Elon Musk reveals what Apple's been doing lately, them two are going at it. It looked like Apple was going to remove Twitter from their App Store, but I guess Tim Cook and Elon Musk had a visit, and they talked everything out and resolved all the issues about Twitter being removed. And here's the tweet about it. The Fed could raise interest rates to higher than expected peak after the latest job reports. Looks willing to cause a recession to beat inflation. As we still have a lot of inflation going on, the Fed has to do nothing, They have to increase rates. Here's a great quote right here. Inflation is like a cancer. If not treated, it metastasizes and becomes much more chronic. The cure of higher rates means it's going to be a rough 2023. So we could possibly see a recession in 2023. Seeing as we're having layoffs and all this, it takes time for all that to show up in the economy and what's going to happen. It's not going to happen overnight. It's not going to happen over a week or a month. So in 2023, you could expect all that to start showing up. And companies when they start reporting earnings, you could see that affecting their earnings, seeing that affect the companies, and seeing that expect the growth. You can see that affecting the growth of companies and just the overall economy and the stock market and everything else. These 49 housing markets to see home prices fall over 15%. How much home prices are expected to fall in America's biggest housing markets? Here's a graph of it. Home prices are expected to fall according to Moody's revised forecast. These 49 markets are expected to see the biggest peak. So the bond market around the world are flashing a warning about global recession. So we could possibly see global recession in 2023. The world's 15 biggest economies has now inverted for the first time since 2014. And here's the charts. Here's the 10-year Treasury yield minus the 2-year yields. And as we can also see, the Fed's balance sheet drops $381 billion from the peak. And as they constantly shrink their balance sheet, and here's a graph of it. So November 3rd, we're back to that peak. In Treasury securities, the Fed balance sheet, we're back to the October 27 of 2021. Now here's a graph of the MBS, and the Fed has stopped buying MBS since September. So we're back to the same spot we were in January 12th of 2022. Now here's a graph of central bank liquidity swaps, the Fed balance sheet. The primary credit for the Fed's balance sheet, week ending in Wednesday. Fed's totals assets from crisis to crisis in trillions, week ending in Wednesday as well. We had the financial crisis, no crisis, the good times, the you know what, the raging inflation right now. So mortgage rates drop again after hitting a 20-year high. So what can we expect for mortgage rates in 2023? So here's some mortgage rate predictions going on into 2023. Here's what analysts had to say is going to happen to the 30-year fixed rate mortgages in the coming months. Is there still time to refinance? Well, interest rates are going up, so could the mortgage rates fall indicate that the Fed might slow down with their interest rate hikes? In case you're wondering what he did say, here it is. With signs of economic slowing down both in the US and globally, mortgage rates will remain volatile, but are likely to continue to trend downwards. The silver lining of all this is homes for sale continue to ramp up because there's new construction, there's new homes being built. Even though a lot of sellers are just sitting on the sidelines, waiting for the perfect time. Buyers who are ready can expect more properties to choose from, more selection, more variety, more new homes, and a better negotiating position, unlike what we had a couple months ago, where everyone was betting against each other to buy a home, and there wasn't much homes to pick from. Now mortgage rates fall, the weakness continues to be in the refinance demand, which dropped 13% from the previous week and was 86% lower than the same week 1 year ago.